Hello guys and welcome back to another video. In this video we'll be going over the ICT London Killzone strategy. Now guys, with this strategy, this is a time-based strategy and we are focusing on the London Killzone. Now if you don't know what the London Killzone is, it is basically a time period between 2 AM to 5 AM Eastern Standard Time. So we will be looking for our setup between these two time periods. Now a tip I have for you guys is to ensure your TradingView chart is set to UTC -5 New York local time, because this will help you to easily spot this time window in your TradingView chart so it does not become confusing for you guys. Now the second step is that we must wait for either buy side or sell side liquidity to be swept. So what this means is we'll wait for either some highs or lows to get taken before we then look for our setup. And then the third step is to wait for some displacement and a market structure shift. Okay, so displacement simply means an energetic price move either to the upside or the downside. So this is what we'll be looking for, along with a market structure shift after we have seen either a buy side or sell side liquidity pool being taken. Now guys, don't worry if you do not understand these terms right now, it will all be answered in this video, so make sure you watch until the end. And then the fourth step is to target opposing liquidity. So this can be old highs and old lows. Alright, so now with that being said guys, let me take you through some examples to show you how this looks like. Alright guys, now I am on a 5-minute chart on NQ. So now let's see how we can use this strategy in the London Open Killzone. So first off, let's mark out our time window that we must be sat in front of our charts of to play this strategy out. So again, it was 2 AM right there until 5 AM Eastern Standard Time right here. Okay, so this is the time window we must be sat in our charts, in front of our charts, waiting for this setup to play out. So next step is we must look for a buy side liquidity pool or sell side liquidity pool to be taken. So let's see what happens, but let's mark that out first. So we have this high right here and we have this low right here. So let's see which one gets taken first and then see how we react. Do we get displacement and a market structure shift? If we do, this will be our framework to either go long or to go short. So let's now play this out. Okay, so we take this first. We have no market structure shift so far. Okay, we then take this out. So notice how we took it out and then quickly rejected it. So for me, this is the actual trade we would be looking to take and go short. So now we have our displacement down. We had our market structure shift below the swing low here. And then now we'll be looking for a PD array to enter off of. So can you see that gap between this candlestick and this candlestick here? We have a fair value gap right there. So we can be looking to go short right there for a retrade into this area. So looking to go short right here, stop loss above the swing high. And then our final step is to target opposing pools of liquidity. So we have these relatively equal lows right here. This could be a target that we look to aim for. So looking to target here for just short of a 1 to 3 risk reward. If we play this out, get entered, and you can see price literally melts and goes even further than our anticipated take profit. Another complement for why we will be looking to go short instead of long is because we are very jagged up here. Over here we have smooth lows in the form of relatively equal lows, so there will be high amounts of liquidity, and therefore this would be the high probability drawn liquidity as opposed to up here. So this is how we can filter out whether we're either going long or short. Now again guys, there is no daily bias required for this London Killzone strategy. All you need to know is where the next likely drawn liquidity is, and in this case it was these relatively equal lows right here. Okay guys, let's go over our next example. So in this example here, I've drawn a straight vertical line right here depicting the midnight of Friday's trading day. So this will be the day that we'll be looking to trade. So now when we're going into this day, the first thing I will be looking for is how the current market structure is presenting itself. So we can see right here, we've taken this high right here before moving down. We made lower highs right here. This low is lower than this high, and you can see we're clearly moving bearishly right here. So now let's see if we have any supporting evidence to continue price moving lower and potentially take this low out for sell side liquidity. So playing price out, let's first off mark out our time windows that we'll be looking to trade. So 2 AM right here and then 5 AM right here. Okay, so we're going to wait for this time window right here. Okay, so now playing price out, let's see how we trade. Okay, we've just entered our kill zone from 2 a.m. to 5 a.m. Eastern Standard Time, and you can see we are making lower highs and lower lows. This is proving to us that we are in fact bearish. Market structure is bearish. We're now looking for this low to get taken, and this is the high probability drawn liquidity. So now we can go into a lower time frame to see if we have any highs taken. Okay guys, so now on the 1 minute chart, you can see this high getting taken for buy side liquidity right there. We then get displacement below this swing low right here for a market structure shift, and we can look for our premium discount levels. So first off, let's mark out from this high to this low the price range we're in. Equilibrium is here. When we are shorting, we want to be shorting above equilibrium in a premium. So where can we find a PDRA that we could align in a premium with? Well, it would be this fair value gap right here, or these consecutive up close candles, which forms a bearish order block. I'm going to go with this fair value gap for simplicity purposes. So just like that, and then we would be looking to go short as price enters this fair value gap with our stop loss right above this swing high. And again guys, if we go back to the 5 minute chart, our frame of target would be below this swing low right here. Okay, so this would be our target, and if we look to target that, we will be falling at a 1 to 4.34 risk reward. Going back to the 1 minute, let's let price play out and see if we reach this target. Okay, so as of yet we have not entered our desired fair value gap, so let's wait and see if that occurs. Okay, we get tapped in right there. Continue to let price play out. Okay, we had a bit of a lag there, but don't worry, we moved to the downside, had a pullback retracement right into this fair value gap and bearish order block with these 3 consecutive up close candles, and we are clearly moving nicely towards our target. And as you guys can see, we had a nice move to the downside, absolutely smashing this low right here. Okay, so this is another example to show you how we could implement this London Killzone strategy. All right guys, now I'm on a 5 minute chart on Euro USD, and just to quickly mention, this strategy works on any asset class. Okay, so this works in Forex, this works in crypto, it works in indices. It does not matter which asset class you trade. Okay, so this day right here, I have marked out the midnight opening, the midnight candle right here, along with the New York midnight opening price. So we'll be looking for a Judas swing for the fake move of the day to ensue, and then we'll be looking for again our steps that we look for before looking to enter in our London Killzone time window. Okay, so we want to be entering below the New York midnight opening price for the Judas swing, or AMD/power 3, and then look for our distribution phase / expansion phase of the day to occur, to then hopefully look to take out this pool of buy side liquidity above this swing high right here. And again, I've marked out our 2 a.m. to 5 a.m. Eastern Standard Time window for our London Killzone. So now let's play price out and wait to see if these confirmations occur. Okay, so we've identified this pool of sell side liquidity right here. So this has been swept. Okay, so we've now taken sell side liquidity. Do we now get some form of displacement to the upside, confirming that we are likely to take out this pool of buy side liquidity? So let's play price out. Okay, we get that right here. See this swing high right here? That's our market structure shift. Get a nice energetic displacement, proving to us that price wants to move to the upside. We then have this fair value gap right here that we can frame our entry off of. Now guys, before we get right back into the video, I really quickly want to talk about my private mentorship. Now guys, if you give me 30 seconds, I promise you, you will change the whole trajectory of your trading career. With this mentorship guys, I will teach you the exact model that I have taught to my members, which has helped them to scale to over 7 figures plus in funding from prop firms, and they are consistently making $10,000 a month from trading, and they are quitting their jobs for good. I have literal students that are making yearly and monthly salaries in a day. Okay, you guys might think this is a lie, but trust me guys, when you know how to trade, this is completely possible and is a reality that most people are living. Now you will have a whole host of benefits as listed here. You can have a read for it yourself. This is a lifetime access for a one-time payment only. I have now put the price down by £100. It was previously $249.99, but you will now be getting it for a limited time only for $149.99. Okay, make the most of this offer guys. Learn the skill set properly. I'm willing to teach that to you guys here for a specific price. I will teach you the exact blueprint blueprint to help you get funded and quit your job, guys, and live a life you've always wanted to live. Stop wasting your money on prop firms blowing challenges when you have not even learned the skill set in the first place. Okay, so start your journey to profitability today. Click the first link in the description and be a part of the best ICT community in the world. So with that being said, let's get straight back into the video. So you can see how we're respecting it nicely. I would have been entered right at the high of that fair value gap. Stop loss below this candle number 1, which frames this fair value gap, and then looking to target this buy side liquidity pool for a nice 1 to 2.5 risk to reward. So continuing to let this play out. Okay, and we hit it right there, just sweeping it right there. Okay, now if you wanted to think of this in terms of power of 3, we had our consolidation right here throughout Asia, the Asian range right here. We are consolidating. We then get our Judas swing / manipulation right here below the Asian range low right there, and then we get our distribution phase to let the daily range expand to the upside. Alright guys, that's pretty much it for this video. If you have any questions, please let me know in the comments below. Make sure you like and subscribe for more videos just like this, and until I see you next time, peace.